Okay, this has been a popular topic today. It's certainly been written about in the newspaper, and it's one that has been, I want to pause for a moment and just talk about a journey here, because this sounds like a destination, but the process and the journey of how we got here is probably what is more important to us. 5 years ago, when I came here from the oil sands in Alberta, I didn't really have a sense personally of the importance of fossil fuels and the impact it has on portfolios. And the students, as was just highlighted, were the first early warning systems for us when they came to us and said we needed to do something about selling out of our fossil fuel holdings because they posed a risk to our portfolios. We listened. There was a task force set up 5 years ago, and the results of that were we committed to do two things. One is we committed to adopt a sustainable investing framework that would enable us to think about sustainable investing beyond just fossil fuels, but including the implications of climate change. And by the way, that included diversity, equity, and inclusion, and other things as well. And secondly, we felt that as financial investors and fiduciaries and the responsibilities we have to our pensioners and our students and our faculty, it was important we looked at these risks from a financial lens. And we also felt that there was a good opportunity to invest in new energy solutions that would address the challenges of climate change. And so we committed $1 billion over that next 5 years towards climate change solutions. We signed up to the United Nations Principles for Responsible Investing, and based on interaction with Regent Sherman and the Regents and a discussion at this committee, we adopted to include ESG, environmental social governance risks, as an equally weighted risk in our investment policy statements. We did all that over the last 4 years. Now, as we did that, we made some economic decisions. We made a decision to sell coal in our portfolio 4 years ago. At the same time, we chose to sell our oil sands holdings in that same window. And we gradually continue to de-risk our portfolios from fossil fuels. And the definition of fossil fuels for us are carbon underground 200 companies, but we don't stop in the public markets. We extend to the private markets as well. And that journey continued over the last 3 years, and we had about $150 million left of investments this year. And this year, we concluded selling in the endowment our $150 million of fossil fuels, and that's why we're making the statement that we are today. And this journey is not isolated to one pool of capital, because we behave consistently with all the pools of capital that we manage, and therefore the pension is going to be a continuation of this journey as we move down this direction. So this sounds like a simple statement. It sounds like a victory lap on some goal that was set. But I think the choice we're making here is to continue to invest in a cleaner future and sell assets that we think are financial risks for us in the endowment and the pension to follow. So that's really what this statement means around climate change and avoiding long-term risk.